All right, team. So whatever you're doing, if you know someone who's going to get a home loan, buy a home, do a refinance, or if you are someone who's going to do that, here's some important stuff you need to know right now in this market. We've talked a lot on this channel about what's happening in the mortgage industry, what's happening with mortgage rates. The pie is getting smaller. This causes a little bit more desperation in some of the sales tactics. We'll call it. There's a very thin line between a good salesperson and someone who scams you. And so I want to go through this right now. I'll do my normal update on the market and everything here in a second, but I want to dive right into this immediately and just give you, there's 3 things you can do. They're very simple things to do when you're shopping for a home loan. And I expect everyone out there who's going to use me for a home loan to put me on blast for this and to request these exact same things from me that I'm telling you should request from whomever else you're shopping. So 3 must-dos when you're shopping for a home loan. Then we're going to do our update. All right. So first of all, ask for the receipts. We talk about the mortgage bond market. I show you mortgage rates here on this channel. Ask for receipts. What are receipts? The bond chart and the rate sheet. So here's something you could do. For example, this is the mortgage bond chart. All right. Let me get myself out of the way here. And all right, so let's say you got quoted a rate on this day right here. Okay. And so this day you get quoted a rate. And then today, bonds are way down here. So when you got quoted this rate, obviously rates got worse. And so for me, it's easy for me to explain that to people. If I quoted your rate on this date and then we're getting locked in down here, I can show you the bond chart and show you bonds went down, rates went up, this is what happened. You need to put that person in a position to do the exact same. So on the day that you get quoted your rate, ask for a screenshot of the bond chart. Make sure that they're not going to later tell you, because it's a lot of what's happening right now is people are quoting much lower rates and they're giving people gotchas at the last second. I know, because I'm getting the calls from people, hey, just got an escrow and our lender said the rates went up to this. And I look at it and no, they didn't go up that high. So people are using the fact that it's known information in the marketplace that rates have gone up to quote low up front and then give you the surprise at the end. So you got to be careful with this. This is the case for purchase loans, especially. It can happen on anything. With refis, I'm just seeing a lot of fees. People are quoting rates. The refinance homeowner is not aware of all the fees. I have to go through that with them and show them all the fees are being charged. So there's a lot of things that are going on in sort of an industry that's been, doing well for a long time. This is uncharted territory. Things have slowed down a lot. A lot of things are getting ugly, guys. So this will all help protect you. So get the bond chart. And then when we pull rates, what do? When we pull rates, there's a rate sheet. So let's just pull a rate right here real quick and see. Let's do a $600,000 VA loan purchase. Okay, we'll do a 780 credit score. And let's call it Bayho. All right. Now, when we do this search, which is individualized for each person, you get an entire rate sheet. So someone may quote you just, 3.25, but no, don't ask them for the rate. Ask them for the entire rate sheet. Ask them to send you a screenshot of this entire thing so you can see what all of the options look like. Okay, so in this case, 3.25 is the closest thing to a par rate. You still get $2,240 towards closing costs for that with no lender fees today. So that, so I could just tell you that, but you're more empowered and you have more information and you are holding someone more accountable if they send you a screenshot of this entire thing. So that's a very, very important sort of step 1 here. Ask for receipts. Do not trust anything. Let me get this out of the way here too. Well, the NMLS 155010, Derrick Evans here, VA Home Loan Specialist. Call or text. If you want to buy a refi, shoot me an email. Okay, let me get this off here. Now, so this is quick and dirty. I know I don't normally do these little PowerPoints, but I wanted you to have this information. So ask for receipts. This is the best way to protect yourself, because a lot of times when you're shopping for a home, you're going to get one quote, you're going to get pre-approved one place. You're not really going to shop around too much right then. You're going to really want to shop around when you get closer or when you get in contract, which is, some people say it's too late, but it's just a reality of the timing, especially in this market. So ask for rates with no fees at all. Be very emphatic about that. No fees at all. Okay, there's 2 reasons why you need to be very emphatic about that. Number 1 is if they can't do no fees, you need to know that. If they say, no, I'm sorry, we have to charge you these fees, that's something you want to know up front. If by removing those fees, it makes your rate higher, that's also something you should know. I always quote rates with no fees and no points because we don't charge any fees. We don't charge any points. But a lot of lenders don't. This is the only reason why there's ever even a conversation between me and another lender when someone is shopping between us is because one is giving them a lower rate and charging them fees, and then me, it's not. And so sometimes their rate will get close to mine, and we'll get into sort of a neck and neck thing, but you have to look at the fees that you're paying. The fees add up, and the fees will affect the rate. So make sure the quote that you're getting is for no fees at all, to make sure that they don't charge any fees, first of all. And then number two, to make sure that if they do charge a fee, you're aware of it. Because a lot of times they try to disguise this, or they won't tell you. They just don't mention it. They won't mention it unless you ask. So make sure you ask for it. And the number three is ask for all of this info in written form. In other words, don't just take it over the phone. Hey, here's your rate. Here's your blah, blah, blah on a phone call, and you're writing it down on a piece of paper. Don't do that. That's not usable. They say, oh, you didn't hear me right, or oh, we were discussing something else. No. You tell them, hey, I want you to text me these details. Text me a screenshot of the bond chart and the rate sheet. If they say what bond chart, move on. Get your quote from somebody else. If they aren't following the mortgage bond market, get your quote from someone else. Send me the bond chart. Send me the rate sheet. Screenshot. Send it to my phone, or email me, and I want the rates quoted with no fees at all. None. No fees. I'm not paying any fees. Tell them that. And then also ask them to, so send it to you in written form in your inbox or on your phone, so you will have a record of it. You want to make sure you keep a record of that communication. There's a lot of funny business going on right now with rates and fees. It's going to continue because rates are going to continue to go up. And it's also going to continue to be more and more competitive as there's a smaller and smaller pie, or a smaller number of loans that are being done, both on the refi and the purchase side. So if you've gotten a quote, if you're in escrow, this happens all the time. And by the way, people are always surprised how quickly I respond. I respond very quickly. That's what I do. This is what I do all day. So if you want me to look at a quote that you've received, a loan estimate, a scenario, just call, text me, email me. I'm all over it. I'll help make sure you're getting a good deal. If you're not getting a good deal, we will get you a good deal. That's simple. So very important right now in this market to look out for those particular things. Okay. So let's get to the regular update here. We are going to pull some rates today. We just pulled VA, conforming balance. Let's take a look. Let's just go down the line. A couple updates. We'll start with mortgage bonds. Friday wasn't too bad, right? We got, I think, 48 basis points. We ended up here on Friday with a nice green candle right here. I like the fact that we had the wick on the bottom. We met that support that I called out exactly that we would hit, unfortunately, on Thursday. And so we had our worst case scenario on Thursday. Then we have this rally. This was actually all over the place on Friday, but it ended up higher because stocks sold off. There was a lot of concerns about tension with Russia and Ukraine. I have no idea why we're even discussing Russia and Ukraine. We have no business, dealing with anything over there. And both Russia and Ukraine say everything's fine. So we really need to knock that whole business off, if you ask me. But I know too many service members who are going to get sent, who are already sent. And, we don't want to see that. There's no reason for it. So then we lost 36 basis points today. So we're now back down, at a pretty low point here, the second lowest point we've been at in a couple of years for bonds. And remember, we want bonds to go up. Bonds going up means rates going down, or the yield on those bonds going down, which means the mortgage rate's going down. Someone said on the channel recently, call them mortgage-backed securities. I'm going to call them whatever I want. It doesn't matter what I call them. The only thing that matters is what do they represent and what do they correlate? What information can we derive from? That's the only thing that matters. Who cares what you call it? So we're down 36 basis points today. Not great, but we do have a wick here. So I'm trying to be optimistic. We've got a couple of bullish wicks going on here, even though we don't have great price action. I would expect, however, that any rally that we see is going to get muted at 101. So if we are able to rally up, we're not going to get past here against the continuation trade I talked about. We've seen this play out over here. We saw it play out over here. It's probably going to play out again right here. At best, we're going to rally up to that area, and then we're going to continue to go down. Bonds are screwed. Mortgage bonds are screwed. All bonds are screwed. I'd say at least 75% of all of the 120 trillion bonds out there are worthless, or they're actually costing people money to hold when you factor in inflation. Inflation is much worse than the 7.5% number that they've told us. But if we just even give it that number, if we go by what the government says, the people who are supposed to be fixing it, who monitor and provide their own numbers about their own performance, if we give them that credit, then almost all of the bonds in existence are worthless, and the ones that have a yield higher than that are junk bonds anyway. So we've got a situation here where rates are going to continue to go up, and we will pull some rates here in a second. I like to save that to the end, just for the sake of, people who are curious about that. We'll get to, a lot of people are curious about that. Let's get to that at the end. I do want to talk about a couple things I think that are interesting. A couple links. I always want to give you some food for thought about what's going on. And the main point today about shopping for a home loan is just figuring out, what's the best way to go about this? Because there are some very aggressive lenders out there. There are some who are very shady. There's some who are very scammy. There's some who are very scumbaggy. And there's some who are just really hardcore salespeople that drink, coffees for closers, Glengarry, Glen Ross kind of thing. And not that there's anything wrong with any of that, but at the end of the day, if you're looking for the best deal, you probably don't want to work with one of those people. I mean, they're probably going to just try to take you for all that they can. Fortunately, we structured our business in a way that that's not even possible. We get paid the same regardless. We just have the minimum margin set in to the rate, and then you get the excess. So that's why, for example, we showed the rate earlier on the conforming balance VA deal, 3.25, and there's $2,240 left over. Well, that money goes to you. We're not set up to just take that extra money from you. We give it to you. If there's an overage, it's yours. And that's why you get lender credits, for those kinds of situations, which is pretty much every loan. But anyway, just wanted to make sure we got that in there. Okay, let's look at a couple things here. So one of the things I'm really looking at right now is oil. And I got out at 90, had the big oil trade. We got in at 45, got out at 90, and I told you it was going to hit 100 and probably will, may even go higher than that. And just people are saying, well, why did you get out if you think it was going to 100? Well, I had things I wanted to rotate into, and I'd rather get out too early than too late. And frankly, with the Fed coming in and being as hawkish as they are going to have to be here, it just seemed to me like that could slow things down for a second. I'm very happy with the profit that we had in it, so we moved on. Gold's actually stretching out a little bit right here for the first time since I've been covering it, stretching out above the 1800 mark, closing in on 1900. Wow. Is gold really a hedge against inflation? We wondered. We got 7.5% year-over-year inflation data. Last year, gold was up 8%. So it's barely keeping up. I thought it was supposed to be the inflation hedge. Now it's on the giddy up. Let's see what happens. Crypto very stallish here. Not a whole lot of movement. We'll look at the Bitcoin chart in a second, but it's pretty boring. So not a lot to talk about there. For the most part, everyone's trying to figure out, okay, well, what do you do? What do you do here? If you have a situation where we have massive inflation that's really, really bad, but you have a stock market that's overcooked, you have a bond market that's about to crash, crypto isn't quite, mainstream enough for the average investor. Remember, 75% of all the wealth in this country is owned and held by people who are 65 years old or older. Crypto, not likely a place for a lot of that money to go. But you could just see a great rotation. You could see a huge rotation for the people who are in value. In other words, looking at bonds and owning and buying bonds for value. If you're buying bonds for value because you want to have a safe place to park your money, those investors might be moving to value stocks or like dividend stocks. And the people who would normally invest in dividend stocks might be buying Bitcoin. And the people who would buy tech might be buying other cryptos. I think there's a rotation there that we're in the midst of that is going to be very interesting to watch. Speaking of stocks, Warren Buffett. Check this out. Berkshire bought $1 billion worth of Activision before the Microsoft deal. You think he didn't know that deal is going down? Come on. You think he's that good? He is good. But come on. He knew. No one ever gets in trouble for this, but he knew. They definitely knew. So Bullard from the Fed, he said that the central bank's credibility is on the line. They need to front load rate hikes. I want to talk to you about what that means. That means that the first hike might be violent. The first hike might be significant. People were saying that, it was going to be a quarter point. Oh, no, it's going to be half a point. Now we're talking about could be more than that. Could be 3/4 of a point because they need to do something. They need to do it quickly. Just talking about it isn't actually making inflation better. Inflation continues to get worse because right now they're actually still stimulating everything. So until something changes and changes, significantly, we're headed down this inflationary path, which is not good. And I think everybody knows that and sees it now. That's an interesting read. Check that one out. I thought this was really interesting. Attorney General in Texas sues Facebook for allegedly collecting facial recognition data without consent. I bring this up because I've told you about how I'm investing in Facebook and how I believe, because it is a pure play on the metaverse, that is the best and safest way to invest in the metaverse long term. Look for things like this, Facebook's always going to be under attack. They have just, privacy. There's so many things that they have to deal with. And the reality of the metaverse is it's sort of enclosed from some of these things. It's very interesting. Like I'll bet you that the metaverse there will be a different way of interacting in the metaverse than there is on Facebook. And I think a lot of the things that they've learned from sort of the two-dimensional Facebook will be revamped for the three-dimensional metaverse. But I just wanted to put this out there. Hey, here's a negative article about something I told you I'm investing in. I've never suggested anyone else invest in it. I'm telling you I am. That's for the long haul. That's for the 10, 20 years. This one is definitely worth looking at. Here's where to keep your cash amid high inflation and rising interest rates. Because if you were worried about the stock market crashing or getting hit hard by this hawkish Fed, then typically the thing to do would be to just go into cash. That's what most people do. Just take your money. It's very simple. Sell everything, go into cash, sit and wait. The problem is when you have rampant inflation, which they're telling us is 7.5%, but it's probably closer to 20 to 25%, you're losing a lot of money by being in cash. If you're a fund manager, you can't do it. And this is one of the reasons why stocks may continue to go higher for a little bit longer, because of the fact that there's just where else do you go? You've got to invest in something. This is why I think Bitcoin could actually have a nice rally based off of this. So it's an interesting thought of looking at, okay, well, hey, how do you ultimately, and it's a reasonable, video to check out. So I just wanted to put that in there, but it's something you need to be thinking about. Okay. Whether you pay attention to this video or not, I just want you to be thinking about this. What are you going to do with your cash? What are you going to do with the investments that you think are now too risky when you liquidate them for cash? What are you doing with that? We talked about Gemini Earn on here, 8% APY. It is crypto. It's a stable coin, but it's 8%. I've got my cash there. So, for me, that's the solution. For me, I can tolerate that risk. I'm comfortable with it. That's where I'm at. So, but what are you going to do? What are you comfortable with? You need to be thinking about that right now. This was actually really good too. This is a really good one. This guy is very, this guy they interviewed, what's his name? Oh, I can't remember his name. Anyway, when you watch the video, you'll see, he is very honest about, okay, here's the risks for Bitcoin and cryptocurrency here. And he talks about potentially a mega hack or something like that, or something that breaks, the proof of work system that seems to be impenetrable for Bitcoin right now. And I really don't see how anyone's going to hack it. It would obviously take some sort of massive supercomputing scenario. I really don't know how it could be done, but he's basically saying if someone could do it, that would be a risk for it. Also, these geopolitical tensions. So it's just good. If you want to get some more on that, check that out. Here's a good one. Goldman Sachs now predicts 7 interest rate hikes in the Fed this year. 7. Now, Goldman Sachs pretty plugged in on the political spectrum, so they're saying 7 rate hikes. I'm telling you, get ready. Rate hikes are not going to be good for stocks. And the fact that they won't be able to stimulate bonds anymore, we're going to kind of have to let the bond market crash, guys. That's just what's going to have to happen. I wish that there was a different situation here, but that is basically what's going to have to happen. And I think our best case scenario here on mortgage rates, let's go back to this chart, is that, our best case scenario is that we can find one of these ranges and just trade in these ranges. These boxes here that we've sort of built that keep breaking to the downside. Can we just stay in one of those for a while and just kind of stay sideways? That's what we really need. I mean, the last thing you need right now is for buyers who are looking at homes that are, already priced very high, right? I mean, they're high, they're up a lot. And now they're getting stung with higher interest rates as well. It's just not a good recipe. It's not a good recipe. And we need some stabilization here. And I think that, I think the Fed's done everything they can do. They have to get out of the way now. They're making the problem worse. And that's the one thing about a free market. When you manipulate it, you're robbing Peter to pay Paul. and where it's about time to pay Paul. So Bitcoin, not very exciting right now. Just trading right at pretty much in the middle between support and resistance, and just kind of going nowhere, which is also interesting. It is interesting when you see Bitcoin, up slightly or up 1% right now, or 1.6% here, and you look back at the stock market and you go, okay, well, the stock market was down a little bit. Oh, Bitcoin's up. The more you see things like that, the better. And that's why I think you could potentially see a lot of money rotate into Bitcoin if it works and it's moving higher while everything else is going lower. It'll be something that everyone will need to get into. Fund managers will need to get into it. Everyone will want to get into it. Hey, the stock market's crashing, but Bitcoin's flying high. Everyone will want to get in. That could cause major FOMO. We have nation states getting involved. It's definitely a situation where that could be the case. I might be too early for that. It could be too early, but it's possible. So I'm watching that closely. Okay. So we're talking about, in this video, how to protect yourself, how to shop for a mortgage rate in this environment. You got to be careful, got to get everything in writing, got to be very, very clear with the people. And I don't care if you were referred to them or if they're a family friend or whatever. You need to be very straightforward and clear with people, okay? And just know that you need to let them know that you know. That's what it really is about. Let them know that you know. All right, we did conforming balance VA earlier. We're at 3.25 with a lender credit, which is cool. No fees, no points, of course. Let's go high balance. Same thing, detached home, 780 credit. No points, no fees. 3.5 here. Now, for people who are like, he's not disclosing the APR. Yes, I am. It's right here, and it's the same size as the actual rate is, so everyone can see it. Not that it matters at all, but it is what it is. We have to disclose it. 3.5. So when you jump up to the high balance area now, we're looking at 3.5, $2,500 lender credit there, as you can see. So 3.5%, and that's up. We're now officially up over 1% on VA, high balance, since just the last few months. In the last 90 days, we're up 1%. And that's what I mean when I talk about the trajectory of rates here is like, okay, well, what should we cue off of here? Like, what's going to tell us when this bleeding is going to stop? I hate to break the news, but we're a long way from that. Probably after the Fed hikes rates, after we see there's potential good things that can come from that. Usually when the Fed hikes rates, you're going to see stocks slow down a little bit. We have a strange environment, though, here where there's really bad inflation going on. So investments into stocks could continue. But if stocks do pull back, that will help bonds a little bit. And I think that's kind of what we need. We need sort of a sustained drawdown correction in the stock market that makes bonds a little more attractive for parking money, and that can maybe keep us in one of these sideways ranges. That's what we need. But we're not going to know that it's over until after the Fed is done, until after we get an inflation report that looks reasonable. That could be a while. We may not get one this year. So we got to be ready for that. All right, so 3.5 on VA high balance. Let's look at conventional rates today too. And FHA pretty much the same as VA, so we'll stay off of that for now. So let's do one here. Let's do a conforming balance. So conforming balance, 5% down. Purchase price, $600. Loan amount, $570. 780 credit. Let's see what it looks like. I have not quoted this today. That's $399. I did quote this today. $399. And that is with a little under credit here. Yeah, $21.49. So this is where it gets interesting. This is why you should always ask for the rate sheet. Okay, you want to ask for the rate sheet because you want to be able to see this information. Like in this particular scenario, it's very obvious and very simple to see that it'd be a really good idea to go for the 3.874. Why is there a 3.874 and a 3.875? I have no idea. What that's about. But you have a 3.99 here that you can get and get $2,100 towards closing costs, or you could go, in my opinion, smarter thing to do, go with 3.874 and pay $855 for it. The $855 that you pay in discount is tax deductible. I'm not a CPA. Talk to your CPA. It's eligible to potentially be a tax deduction. So you pay $855 and it lowers your payment by $41. So within the first couple of years, you easily pay off the $855. So it's a good deal. It's a good deal to take that. So I would actually do 3.874. That's conforming balance. So remember, conforming balance is anything under 647,200. Now we're going to check out high balance and see what it looks like. And I'm a broker, so I'm pulling this information up and looking at different banks. We're just going with the bank that has the best rate here, which is one of the benefits of being a broker, why I'm a broker. It's a little bit harder for the loan officer, but it does help the client get the best rate. And if you're in it to serve people and do right by them, then that is the right way to go, in my opinion, obviously. So let's look at high balance here. This is going to be for a loan amount of $760,000 on an $800,000 purchase price. 780 credit, detached home, no fees, no lender fees, no points. CMG coming through. All right. So on this one, so high balance, 4 1/8, 4.125%. You got a $1,500 lender credit there, and that is pretty clearly, the par rate. That would make sense. 4.125. So that we're for high balance conventional, which is going to be the first one in. That's going to be the first one into each realm of rate. We are now in the 4s, and it's pretty clear. So you're still seeing low 3s on conforming balance VA and FHA, mid 3s on high balance FHA and VA, and that's where rates are today. Those are all quoted with no points, no fees. So if you have questions about this, you want me to look at a loan estimate, you want me to give you a specific quote, I just need loan amount, credit score, a couple basic things. You don't need to pull your credit if you know your credit score. We can get that information to you pretty much right away. Give me a call, text, shoot me an email, and I'll be here. So hopefully that's helpful for you guys. Have a great day, and we will talk soon.